Smooth 98. Here we are gone past 6:30 for Thursday morning, which means the show you're looking forward to all the time at this time, Business Express on Smooth Breakfast. I'm Sope Martins, and joining me for the next 15 minutes, I've got Rotus. Good morning, Rotus.
Good morning, Sope. Good morning to all our listeners and viewers out there. Good to be with you all on this Thursday.
Yes, and today, Rotus and I are joined by a guest. We are joined by Muyiwa Oni, who's the regional head of equity research, West Africa at Standard Bank Group Securities. So Muyiwa will be with us in just a moment. Now, this is an interesting show, right? Because what we're going to be talking about is the stock market and our FX woes and how it impacts the stock market. So Muyiwa, are you with us?
Yes, I am. Sope, morning, Rotus.
All right. Good morning.
Good morning.
Fantastic to have you on the show. Okay, so make sure you join the conversation. As we're streaming live, you can leave your comments up on the live stream. Just go over to youtube.com/smooth981FM Lagos. Send your WhatsApp messages in 20809 440 981 and tweet at us. We are at smooth981FM. All right, so let's just give you a quick background to what's going on. So MSCI Inc., which is a provider of critical decision support tools and services for the global investment community, announced in the last week of June the results of the MSCI 2022 Market Classification Review. And one of the outcomes of that review was the launch of this consultation on a proposal for potential reclassification of the MSCI Nigeria indexes from frontier markets to standalone market status. So what does that mean? What are the implications for Nigerian equities? We're going to be finding out all of that right now.
All right. And so, Muyiwa has written a report on that. So that's what we wanted to discuss. So Muyiwa, what does that exactly mean? Moving Nigeria from frontier, reclassifying Nigerian indexes from frontier markets to standalone by MSCI. What does that mean?
So Nigerian equity market, so there's a basket of Nigerian stocks that has been part of the MSCI Frontier Index for some time now. And the Nigerian equities account for over 4% of that index. Not sure the exact amount, but it's over 4%. And what it means as well is that, so for frontier market investors globally that want to invest across that segment of the market, they would have access. They will also include Nigerian equities in there. So some of the stocks that would be in there would be likes of GT Bank, Nestle, a few well capitalized and liquid stocks as well. And what it means by reclassifying Nigeria standalone will be that Nigeria will be taken out of that frontier index, and investors that would be investing in that index won't have access to Nigerian stocks anymore, or wouldn't be looking at Nigerian stocks anymore. And so for investors in there, if Nigeria is replaced is classified as standalone, it would mean they would have to take out their Nigerian stocks that they already invested in. So they'll have to sell off those stocks and won't really be looking at Nigeria again until we're placed back in that index. And so ultimately what it means is that
I need to, because that doesn't sound great from my point of view.
It's not sadly. So what it would mean as well is that going forward, you'd see far less interest in Nigerian stocks from foreign portfolio investors, which typically will track that index. So to your point, it's way more negative than where we are right now. And I think part of the reasons why this conversation started is for most investors, most foreign portfolio investors, they really haven't been able to go in and out of Nigeria. So most of them have been on queues for some time now, and that interest in Nigeria has reduced considerably. So with this, implications is that the interest would reduce much more than what we have currently.
Can we withstand that? Just how much of an impact would that be? And how would we be able to, deal with that? I'm concerned now.
So I'd say interestingly,
explain it to the layperson.
So interestingly, for now, one might argue that you might not really see too much of a change. And the reason why is because for some time now, foreign investors have been leaving the Nigerian market. So since the pandemic, and I'll say at that time, it was most investors were leaving frontier and equity markets in general. But because we now placed in far more restrictive FX policies, it now made it far more difficult to invest in Nigeria. So if you can't go in and out of a stock, then you really won't come there. So it's as simple as for a layman, if you deposit your money in a bank, for example, and you can't take it out from day one, the day you want it. If the bank keeps on telling you, come back tomorrow, next time you have cash, you won't bring that money into that bank. You look for another bank because you feel with these guys, my money will get stuck in there. And so with this, foreign investors as well, that's really how they see Nigeria, because they haven't been able to take money out. So you have investors that have been on the queue trying to take money out for some time now. And part of the reasons why as well is that they can only trade in the official market. So for these investors, you can't go to the parallel market, for example, to take out your money. And so because that liquidity in that market is much less, you haven't seen that interest. So in the report as well, we actually showed foreign participation in the equity market. In the past, it used to be about 50-50. Now it's more like 18%. And what is really in there is money that has been in the country for some time. You're not really seeing any fresh flows coming into the country like we used to in the past. So in a way, until we change this FX policy, this conversation will go on. And interestingly, there are a few institutions engaging with the MSCI trying to delay that reclassification. Because in 2016, we had this similar conversation as well, when with the oil price crash, Nigeria going to a recession, we also had some administrative adjustments in our FX market where liquidity also dried up, and the conversation started, and a few institutions, not just domestic, even some foreign institutions as well, felt it might be too early, don't take Nigeria out yet. At some point there will be a resolution in this policy, because it might take a while before you bring the country back in. So I don't know if you can remember, but in that 2016, Nigeria was taken out of the JP Morgan bond index. And so for foreign investors that track that index, they won't be, till now, they won't be buying Nigerian bonds. So local bonds, you won't see that appetite or interest. And because of that as well, the interest in Nigerian bonds has reduced considerably. So even when markets went back to normal, because there are still some measures that they expected to come in, we still haven't been taken back in. So if you think about it, since 2016, we've been out with this index as well. I guess part of the reasons why that conversation needs to happen as well is that it might take years before we're reintroduced back in that index.
Oh, wow. What about this? I want to explain for our listeners and viewers. Your report also talks about foreign investors using dually listed stocks to try to exit the market. Can you explain how that works?
So currently there are two stocks listed in Nigeria and the London Stock Exchange. So you could have stocks listed in multiple exchanges. I think currently EcoBank, that's ETI, is listed in Nigeria, listed in Ghana, and also listed in the BRVM exchange. So investors can decide to trade in Nigeria and maybe take their money out either in Ghana or another market if they feel there's liquidity there. I think Owando in the past used to be listed in Nigeria and also on the Johannesburg Stock Exchange. And with those stocks that are listed in multiple markets, you can trade them across markets. So you can buy the stock here, for example, move the stock into London, sell it to an investor in London, and then take your money out. So we've seen investors see that as a way to exit or externalize their funds from the Nigerian equity market or from the Nigerian market. And so because of that as well, there's been far more interest in these two stocks, so Seplat and Airtel Africa. Those two, there's been far more interest. And also what's interesting about that as well is that if you look at the implied exchange rate of Nigeria versus the dollar, taking that action, you find that currently it's up. The Naira versus dollar exchange rate, implied rate, is around 1,097 Naira currently to the dollar for Seplat, and for Airtel Africa, 1,043 Naira to the dollar. And what's interesting is that for some of those fund managers, that's how they're seeing Nigeria right now, because for them, that's the easiest way to take their money out. And because you don't have that much access to the official rate, which is around 415 to 420, this rate seems to be where
that have access to that rate.
Yeah, and I think what's interesting as well is that if you look at the currency over the quarter, so looking at those rates, implied has the currency had depreciated by about 40% for those two stocks. So before now, implied was closer to 600, but because for them, that sense of urgency to leave is increasing, and this seems to be the easiest way to leave. They're willing to exit at a much higher rate. And I think a couple of months ago, so it hasn't happened recently, but I think it was at some point last year, we actually saw some investors also use these stocks to come into the country as well. So buy Seplat in the UK because the implied rate is much higher. So in a way, it's almost like coming into the country at a far more accommodative rate for them. And so they would come in through that market, come into the country, and then whenever you're ready to leave through that market as well. And I suppose maybe
Rotus, I've got this message in from Zen, who says, no Naira FX appreciation. This may also be partly due to the fact that the pound yesterday was at an all-time low against the dollar at some point. I think it was buying approximately £1 to $1.17, and allegedly some were shifting their values to the dollar, etc. He says, I'm sure Muyiwa and Rotus can explain better or put it more succinctly.
The dollar has been appreciating. That's what it means. The dollar has been strengthening. So the pound fell to almost, I think they're almost at par. So what was being reported yesterday was that, I don't know whether it's all the political wahala going on in the UK with Boris Johnson and his issues, and then the UK fears of UK recession. But Muyiwa, if the dollar continues to appreciate, that puts more pressure on the Naira, Abi?
Yes, so no, not necessarily, because the Naira is pegged to the dollar. So in the real world, ideally, what will happen is versus the pound, you should see some appreciation. So like other currencies like the South African ZAR, for example, that trade independently. But ours, because we are referenced, we've decided as a monetary policy to peg our currency to the dollar. You won't really see that level of interaction. What typically will happen is if there's less demand for Naira from dollar investors, then you'd see, or from individuals that need Naira anyways and are willing to trade for the dollar, you would see the currency depreciate. And I think, speaking to what's happening in Europe as well,
so beyond, come to the end of the show.
Okay, I guess we can continue some other time.
All right, then. Thank you so much. Yes, like I said, the conversation on this platform, which is on air, is done, but you can always continue it with Muyiwa Oni. And actually, yes. So how can we continue this conversation with you, with Standard Bank? Do we go to their...
Yes. I think, so there's the Stanbic IBTC handle on Twitter. I can check to be sure of the exact.
And of course, in fact, you know what? Rotus will just be tweeting everything. That's what I'm going to put it. I'm putting it all on you, Rotus. So find at Rotancode. Okay, there you go. And of course, we are at Smooth981 FM. I'm sure he'll tag us in it. But that is that. Muyiwa Oni, thank you so much. Muyiwa Oni is the regional head of Equities Research West Africa at Standard Bank Group Securities. Absolutely fantastic. And I love the metaphor, because I understand as soon as you said bank, money, not being able to touch this, I understood everything. So thanks for that. So always a pleasure having you in, Rotus, and we'll